Hey Bowtie Nation, Joseph Hogue here, and we've been talking penny stocks a lot lately. Those fast-growing small-cap companies with the potential to double your money or more. Stocks like Ryerson Holdings, ticker RYI, up 386% since recommending it 4 years ago. Or Vital Farms, up 249% in just 2 years. And while share price doesn't really make something a penny stock or not, something I'll explain later, there's just something about stocks under $5 each, about being able to get thousands of shares and build a real stake in a company that could become the next Nvidia, Google, or Apple, selling for hundreds of dollars each. Let's get started on our list of penny stocks under $5 with Paysign Inc., ticker PAYS. But stick around and I'll show you the critical filters to picking these stocks and how to invest. Paysign is a prepaid card and payment processing service for customer incentives, employee rewards, and rebates within the healthcare, hospitality, and retail industries. The company provides an end-to-end and customized solution for enterprise clients, an addressable market it estimates as large as $728 billion in the U.S. alone. Revenue growth has accelerated over the past year to a 30% pace, with pharmacy patient affordability programs really taking off. But even that at $50 million in sales is a fraction of that potential $700 billion market. Sales are expected 20% higher for the full year and 12% next to $64 million, which puts the stock at a fairly cheap 4x price to sales valuation. And best of all, this one is already EBITDA and net income positive, rare profitability among penny stocks. We're just getting started on our list of penny stocks, but I also want to personally invite you to get the weekly Bowtie, our free weekly newsletter with all the stock market news, strategies, and trends you need to see. Each week before the market opens, I'll show you what I'm watching and the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community, so look for that sign-up link below. SelectQuote, ticker SLQT, isn't the kind of new company you think about with penny stocks, but is seeing new growth. The direct-to-consumer insurance comparison model distributes 50 carriers for auto, home, senior Medicare, and life insurance. The company has been refining its process from lead generation through underwriting for more than 30 years, and while it hasn't stated anything publicly, I wonder if AI improvements aren't far off, with over 1 billion data points collected, driving that model improvements and efficiency. Senior Medicare insurance is just under 60% of revenue, but the healthcare segment is booming with 260% growth over the last year. This year's revenue growth is expected 27% higher, with earnings up 41%, which means this one is not only boosting that sales number, but also becoming more efficient on its costs. That sales growth may slow a little to 18% next year, but the company could reach net income profitability. I highlighted Perfect Corporation, ticker PERF, recently in an AI penny stocks video, and yeah, I'm still not wild about the name. Yeah, naming your AI beauty company Perfect just seems a little on the nose to me, but pun intended, what it's doing here is perfectly matches with the influencer era of the industry. The company serves the enterprise market with a software-as-a-service model, helping a business's customers try on products before they buy. Perfect also serves the consumer market directly with its mobile apps and generative AI features for makeup, hair, nails, and fashion. The model supports 90,000 skin tones and 10+ makeup textures, taking nearly 4,000 point references on a person's face. Now folks, I don't have much of a need for it because of my ruggedly handsome good looks, but beauty and makeup has become an influencer-driven social industry, and the model here has so many other use cases. With users to the mobile app growing 30% to 900,000 over the last year, Perfect reported 18% year-over-year revenue growth in the first quarter to $14 million, and $54 million for the last year, and has guided to 15% sales growth this year to $61 million. Now, that might not be the fastest on the list for sales growth, but I think this app is being underutilized in the enterprise space, enabling makeup brands to show customers how they'll look using these AI features. I'll show you how to pick your penny stocks and reveal 4 more penny stocks to buy next. But first, you need to know how to invest in these. That's because, nation, penny stocks can make you rich, but if you're like most investors, you're doing it completely wrong. That's because most investors buy and sell their penny stocks like their daily mocha coca frappuccino, buying and selling for that quick profit. And this kind of short-term investment can make you money. We've done really well with penny stocks recommended over the last few years, with an average 80% return, even after some completely crashed. So yes, you can make money trading penny stocks, but it won't make you rich. And why? Because it's a 1 step forward and 2 steps back mentality. You take those penny stock profits too early when a stock hits 40 or 50% return. Investors get excited and just want to book that money, but they hold on to their losers. So instead of jumping in and out of your penny stocks, the best strategy here is going to be building a portfolio of maybe 10 or 15 great companies over a few years and and then holding them, giving them 3 to 5 years to grow into that 30 times return instead of selling out after a quick 50% gain. In fact, maybe you only add 3 or 5 new penny stocks to your portfolio each year, just being super selective in terms of which you buy, so you're only putting money in the very best. Up next, Lantronix, ticker LTRX, reached cash flow profitability last year and is a strong player in the IoT theme driven by AI. The company provides solutions in video surveillance, infotainment, and intelligent substations, operating in 3 core areas of software as a service, value added, and hardware to industrial users. It could be expandable into other customer verticals. It's one of the riskier penny stocks on the list, but management is forecasting at least 18% revenue growth this year, along with a 50% bump in earnings per share. Taking some of that risk off is the fact that it did reach cash flow profitability on an operational basis last year and blew past it over the last 12 months, generating nearly $20 million in free cash flow. With continued growth, it should dig out of this recent investor disappointment and take the stock price higher. The smallest penny stock on our list, $30 million Gorilla Technology Group, ticker GRRR, an infrastructure and network defense company built on an AI-based platform for video and data analytics. The company's solutions can be deployed across public and private sectors. For example, data analytics within buildings for secure and efficient use, for police with AI-powered intelligence to improve reaction times and for real-time monitoring, and in healthcare for infrastructure and security. Now, Gorilla is still unprofitable at the net income level, but is expected to grow sales at a 27% rate over this year to $100 million. EBITDA of $18 million on a trailing revenue of $64 million is a very solid 28% profitability margin, giving a very high Rule of 40 score for that growth and profitability. The company booked its largest order in history last year, and there are lots of use cases for this platform. As a very small company, there's still quite a bit of risk here, but the upside potential could be the best on the list. I am a little worried about the cash flow situation here, with just $5.3 million in cash to cover the company's negative cash flow in operations, so I would limit any investment in this one to a small amount. We've still got 2 of the fastest growing penny stocks to highlight, but all you out there in the nation have heard me say share price really means nothing for a penny stock. The example I always like to use is shares of Rolls-Royce under $1 each, but the 120-year-old company, already valued at $89 billion, is hardly the kind of growth company we're looking for here. On the other hand, $25 per share Alico may not seem like a penny stock, but at a market cap of just $196 million, it has a lot of room to grow and is increasing revenue by more than 50% a year. So low share price doesn't necessarily mean a stock is a penny stock or a good investment, but there is one factor in these low price stocks, those stocks under $5 each, that could help them produce higher returns. That's because at less than $5 each, these shares can be bought by the hundreds, even thousands by regular investors. Instead of having to save up over $200 for a single share of Apple, you can start investing immediately and building that position. That means a larger investor base for these penny stocks, increasing the liquidity and volume, all factors that can help drive a stock's popularity. And of course, popularity and more investors doesn't guarantee returns for a stock, but doesn't hurt either. Opal Fuels, ticker OPAL, is the largest company on the list at $711 million market cap, a vertically integrated biomethane energy company. Opal captures biomethane from landfills, livestock, and organic waste, converts it into renewable natural gas, and then sells it as a fuel or to generate electricity to sell back into the grid. In business for over 20 years, the increasing attention to renewables and fuels could mean the right place at the right time for Opal. Capacity has steadily increased over the last 3 years and is expected higher by 20% this year. And that is expected to turn into 30% plus revenue growth this year and next, and to drive a boom in earnings to nearly $1 per share. Over the last year, the company booked nearly $27 million in EBITDA on $278 million in sales for a 10% margin. Combine that with the 32% average revenue growth, and you've got a penny stock with a great balance between growth and profits. This next penny stock under $5 has the highest growth of the group and could be about to run higher, but more than just that price per share. Whenever you're looking for penny stocks, you need to know how to find those trading for the best valuations. Check out this video next, and I'll show you the process for filtering penny stocks, along with 5 that are too cheap to ignore. The Real Brokerage, ticker REAX, comes in at just under $5 a share as I'm recording this, but maybe not for long, with the strongest revenue growth on the list. Real Brokerage is a $934 million real estate platform for agents that could see some of its best years as the industry transforms after this year's historic court case in real estate commissions. The platform streamlines the experience for buyers with a mobile solution and creates more revenue opportunities for agents, something that could be very important if agents aren't able to charge that fixed commission anymore. You see, after the Supreme Court ruled that real estate agents couldn't demand that flat commission, the entire agency model has been turned on its head and is watching for what comes next. It could give platforms like this a competitive advantage in its ability to offer more services at a lower cost. Sales are expected higher by 47% this year and 27% next, the kind of fast growth we want to see in a penny stock. And while earnings are still negative, the company is moving closer to net profits. Real Brokerage is already up to nearly $800 million in sales and over 16,000 agents using the platform in just the last 2 years. There is no long-term debt and free cash flow is positive with the shares trading at a great valuation. Get the weekly bow tie free with the link in the description and see the stock market news and stocks I'm watching every week. Or click on the video to the right for the 5 cheapest penny stocks in the market, one trading for less than $1 per share. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.